If you are a trader struggling with entries, then this video is for you. If you are somebody that you analyze the market but you don't know what to exactly see before pressing that buy or that sell, then this video is definitely for you. Welcome to my YouTube channel. I am Emilienne Bejanem, aka FX Buddy, the self-life trader, and I always make forex make sense. In today's class, I will be teaching you all how to understand candlesticks. Candlesticks are the last thing we need to see before giving us the final confidence and confirmation to click the buy or to click the sell. So get your books ready, subscribe to my YouTube channel, share this video to friends, family, and every other person, and let's learn candlestick together. Also click the link in the description to join my free Telegram channel, and click the link in the description to create a forex trading account. Let's go. Welcome to class. The first thing we want to know while we are studying understanding candlestick is, what is a candlestick? As traders, we often hear about candlesticks, this, that, but what exactly are candlesticks? Now, write it down. Candlesticks are visual representation of price movement on the chart. Visual representation of price movement on the chart. It means if we open a forex chart after this, you see candles there, either red, green, or whatsoever. So all of that are price movement. It means each candle tells you price movement. That is all about understanding what a candlestick is about. Next, we want to look at how are candlesticks formed. We have different types of candles, and all of them, they mean different things. Now I will be teaching you how to identify them, how they are formed, and what they mean, like being able to interpret what candles exactly mean. So first, how are candlesticks formed? Now candlesticks have basically 4 parts. Each candle has 4 parts. First, we have the high price. Next, we have the low price. Next, we have the open price, and we have the close price. So every candle that you'll be seeing, every candle that you have seen in the forex market has all of this, and also they have bodies. Body, right? Now high price, highest price. So high price is the highest price that candle has reached at the time period. So high price is the highest price that the candle has reached at the time period. Next, low price. Low price is the lowest level that the price has reached at the time period. Next, open price. Open price is where the candle's body starts forming from. I'll draw it. Next, close price is the price where the candle's body closed at. And we have body. The body of the candle basically tells us the length of the candle. Is it a small candle? Is it slim? Is it chubby? And whatsoever. Now, a typical bearish candle. A typical bearish candle. Remember, bearish here represents sell. So a typical bearish candle, a typical sell candle, because in the market you see two colors. You see bearish and you see bullish. You see red and you see green. So a typical bearish candle, in brackets sell, or a red candle looks like this. So this can be a typical bearish candle. So all of this, great. Now remember, every candle has all of this. Now this is a bearish candle. When we are selling, we are expecting the market to drop down. So as at here, we have the open price. So this is the open price. This is where the body of the candle starts forming. Next, we have the close price down here. close price, because every candle opens here and then closes here, preparing for the next candle to open. Remember, the market moves like this, not backwards. The market moves forward. So the bearish candle would open from here and close down. Next, this is called the high price. Remember, the high price is the highest level of price that this candle reached at the time period. And this other side is the low price. Low price, the lowest level of price that this candle reached at. Next, this high and low, they can also be called wicks. They can also be seen as wicks or rejection. They can also be seen as wicks or rejection, because if the body of the candle starts from here, it means when this candle opened, buyers pushed it up, but then sellers pushed it down, and the body formed at this level. Simple. So this is wicks. So the highs and the low, they are also seen as rejection, while this entire part here is the body. Is the body of the candlestick. So this is a high momentum candlestick. This candlestick is called a Marabuzo candlestick. So this is a typical representation of a bearish candle. Now I'll demonstrate how a bullish candle looks like. Does the board explain here?
Yep.
Okay. So a bullish candle, for a bullish, we have bullish or buy, often seen as the green candles. Great. So a typical bullish candle would look like this. That's a high momentum bullish candle. Will look like this. Perfect. Same thing. This is the high. This is the low. Right. Now, when we are buying and expecting the market to push upwards, right? So it will open and then close. So it opens here and closes here, and this whole part here is the body. So this is a typical representation of a buy candle, a bullish candle, a green candle, a long candle. While this is a typical representation of a bearish candle, a sell candle, a red candle, a short candle. So before we get to the chart and actually understand candlestick as per the market movement, I want to explain something very, very insightful. In as much as we generally have two types of candle, it's either a candle closes as a buy candle or as a sell candle. Either you see it green or blue. Now, I personally want to introduce you to three types of candlesticks. So the first, we have high momentum. We have the high momentum candles. We have the rejection candles, and we have the indecision candles. Great. So we have the high momentum candles, the rejection candles, and the indecision candles. These are the three different types of candles that you will see in the market. When I open the chart after now, you see thousands of candles, but it is either they will fall under high momentum or rejection or indecision. Now, a typical high momentum candle would look like this, like the first candle that we drew. This is a high momentum candle. Now, why is this considered a high momentum candle? Because the body of the candle is large. Because it is a healthy candle. It's not skinny. Right? And now a high momentum candle tells you who is in control in the market. It tells you who has more power in the market. So this is a high momentum bearish candle. It means as at this time, there were many sellers in this market. giving the market pressure to push downwards. This is a high momentum bullish candle, meaning at this time there were lots of buyers in the market pressuring the market to go upwards, and us, we just go with the flow. We go with every party that wins. Next, a typical rejection candle would look like this. Rejection. So this is a rejection candle. Rejection candle, why? This market bought up to this high price, but then sellers said, oh buyers, this market is mine. So sellers were able to compress the market to push it back down, and the body forms here. So this candle is a rejection candle because it rejects from a buy to a sell. That's, it is rejecting downwards, pressuring the market downward, and this candle is called an inverted hammer. This candle is called an inverted hammer. Now, a bullish rejection candle can look like this. Great. This candle had sold down up to here, but then buyers pushed it up and pressured in, and the body formed at this level, right? So this is a rejection candle because it was selling, but then it is now buying. And this candle is called a hammer. You know, a hammer looks like this. It has the hammer, then the head above. Great. Now you will understand how we use all of these candles when we get to the chart. Next, we have the indecision candle. Now, indecision candle means you don't know if you should buy or if you should sell. So an indecision candle, you normally see candles giving cross, candles looking like this, candles looking like this. So all of these are indecision candles, like candles that do not clearly tell you who is in control in the market. If you see a high momentum candle, it tells you who is controlling the market. If you see a rejection candle, it tells you which direction the market is pressuring towards, and you follow. But if you see an indecision candle, you don't know what to do. You don't know if you should buy or if you should sell. So the only thing you should do is to wait for the next candle to form. Hope you are learning, hope you are copying notes in your book, and if you have any comments, drop it in the comment section now. In case of any questions, drop it there and I will respond to you. Do also click the link in the description to join my free Telegram channel where I share all my analysis setups, educational videos and everything. Also click the link to create your forex trading account and start trading with me. Let's go. So here is the chart. So I have just opened the chart on my favorite pair USD card. So all we have to do first is identify the candlesticks. Now if we zoom in here, you see that this is a high momentum candle. This is a bullish Marabuzo candle. Good, identified. Now if we look at this candle here, it's giving inverted hammer. Like sellers pressured the candle and the candle has gone down. Mind you, a lot of you might be asking that, okay, inverted hammer, but then the candle looks blue and so on and so forth. Any candle on this chart is a battle between buyers and sellers. How the candle finally closes, that is, the color of the candle tells you who won the fight. Who won the fight by the time the candle had to close. Remember, on the 1 hour time frame, each candle takes 1 hour to open and close. On 15 minutes, every after 15 minutes, a new candle is formed. So we are on the monthly time frame on USD card. It means each candle here has taken 1 full month to form. Right. So if you see this candle, this is an inverted hammer. It means this particular candle bought up to this high, but then sellers pushed it back down. But the candle ends as blue because as at the time where the timeline had to elapse, buyers were still trying to push it back up a bit. So that's why the color is blue. So this is a rejection candle, as we explained. This is also a rejection candle. This is also a rejection candle. So the name of this candle is spinning top, right? Spinning top. It is giving like equal rejection from both sides. And now the body tells you who won the fight. Sellers. And the way a candle forms and then close, it tells you what to expect from the next candle. The next candle sold, it still gave a spinning top, right? So everything we are doing now is identifying candles and what they mean. Rejection candle downwards. The next candle that forms is a sell candle, still rejecting the market downwards. Now this market closed above here. It means it has a small wick. It means by the time the market got here, buyers were maybe trying to push the market up, but then the time elapsed. That is why the next candle that formed, you see the market dropped down again before buyers pushed it back up, and this is a Marabuzo candle. This is a high momentum candle. So these are high momentum candles. Rejection candles, either downwards or upwards. Then we have indecision candles that we don't know what to do. But now, what is the essential thing of knowing all of these candles? So understanding candlesticks helps you to know when to buy and when to sell. But now candlesticks, they don't just walk on their own like that. We need to analyze the market. So we need to mark out key levels, which are levels that price has been respecting in the market. Then on those marked out key levels, we get to see how candles are being formed there. That is where we get to make more informed decision on if we should buy or sell. So I'll quickly analyze this chart, and you will understand how we use candlesticks. So the first thing, I trade pure price action, and with pure price action, the first thing we want to do under technical analysis is top-down analysis, marking out key levels from higher time frame down to lower. Meaning we'll start from monthly, we mark weekly, daily, 4 hours, 1 hour, 30 minutes, 50 minutes, and so on and so forth. So we are marking out key levels. These key levels are the lines that you often see traders having on their chart. You see horizontal lines, those are called key levels. Now these key levels are levels that price has respected more than one time. And remember, with pure price action, it's simply what price has done in the past. We are expecting that it will happen again in the future. If price bought up and reached here in the past, we are expecting that maybe sometime in the future, price might still rise up and reach there. Key levels, price action. So we start to take our horizontal line and we'll mark out key levels that price has been respecting in the market. So you look for the most obvious levels that you can see. The most obvious levels of price, you clearly mark them out. So we have correctly marked out our key levels on the monthly time frame. And now this monthly time frame is not where we take entries. The monthly time frame is basically for us to know the directional bias of the market. Is it on an uptrend? Is it on a downtrend? Or is it ranging? That's all we need to know. And now we need to look at how candles have been formed here. Now these lines that I have drawn, these key levels, they are automatically our support and resistance levels. The levels above are the resistance level, and the level below is the support level. I did a detailed video explaining how support and resistance work. If you've not watched it, do well to watch it. Great. So resistance, we already know. People who have studied with me, we know resistance means sell and support means buy, because price will not easily break resistance, and support price will not easily break it. So at support, price buys, and at resistance, price sells back down. But then there are cases where support breaks and becomes resistance, and cases where resistance breaks and becomes support. Now what I want us to look at is the way candles have formed here. If we zoom into this, we'll see that this candle here is a rejection candle. This is a rejection candle. It's almost given like shooting star or maybe inverted hammer, right? So it is rejecting downwards, telling us that okay, sellers are trying to push this market downwards. That's why you see that okay, the next candle that form is a sell candle, and remember this is monthly time frame. So imagine seeing a rejection candle like this at a key level, right? It is telling you what to expect. Now this rejection comes from a, if we are looking at it dropping down, the rejection comes from a support level, because when the level above is being broken, it becomes a support level. And now at this support level, the support becomes resistance, and price drops down, targeting the next low. So understanding how to read candlesticks is very, very vital. Next, another obvious candle I want us to see. You see this is a Marabuzo candle. Okay, so this is a Marabuzo candle buying off a support level, the level down support, and this one up resistance. Now the Marabuzo candle is buying from a support level, buying off this other candle that was formed. So this candle looks like spinning top, like almost an equal sell and buy rejection, telling you how the next candle might form. So if you see a rejection candle closing above a support level, it is giving you confirmation for a buy. It's giving us confirmation for a buy, because buyers are pressuring and pushing the market upwards. So this is it for the monthly perspective. Now it will come down to the weekly. Same thing, weekly and the monthly, they give us the same view, right? Now on the weekly, you still want to mark out your key levels. Weekly time frame, we don't place entries there. It's for swing traders here, but we are day traders, so we are just checking out for other key levels that we did not see on the monthly. So when you mark out your key levels on the weekly, you are good to go. So on the weekly, same thing, we can say okay, USDJPY was on an uptrend, but then it's dropping down. That is cool, that is okay. And now we need to examine how the candles have been forming. We see a rejection from the resistance level. It means USD card rather. It means USD is selling from the resistance level. We all know at the resistance level we should sell, so this is good. Now if you look at how price reacted at this support level, you see rejection candles here. Rejection candles. This particular candle sold down up till here, but buyers were able to push it up. It already tells us who is in charge of this market. It says at this time there were many buyers in the market, and they were able to push this candle back up. The next candle that formed is sold, but then buyers are still trying to push it up. The next candle that formed sold up till support, buyers still pushed it back up. So as at now, you have seen 3 rejection candles validating that buyers are dominating the market, meaning you should be looking for buy opportunities. And what happened? USD card bought. This is just the weekly perspective. You can imagine how many 1 hour candles are inside inside all these candles. So on the weekly, we are still studying how candles work and how the work of support and resistance. Next, we want to go to daily. Now, daily and the 4 hours, they are the mid time frames that we get to see patterns, we get to see if there has been a change of trend, a continuation, breakout, retest. That is what we are looking at here. So I'll do a separate video. If you want me to do a separate video explaining how to trade off chart patterns, comment below and I'll drop it for you. So great. So on the daily, you still need to mark out your key levels that price has been respecting in the market. You need to mark it out clearly. After having marked, now you look at how the candles are forming, how the candles react on the key levels. So I say key level here, I'll just quickly mark it. Great. You see how the candles react. Still, you see that USD card sold from resistance. When it got to support, it tried to buy, rejected back, it broke support and support became resistance. Then it sold back down. Same thing, you see this rejection candle. It rejected upwards, right? So when a candle rejects, it just tells you how the next candle might form and what to expect from the market. Currently on the daily, we can see a rejection downwards, given like inverted hammer, but then buyers are still in control because the candle is blue. So currently on the daily, sellers are trying to push USD card downwards. Sellers are trying to push USD card downward. And now, if they finally push it down and then the candle closes below our support level, the support has been violated and it is now a resistance level that we sell from. So if this candle sells, like if sellers keep pushing it and it rejects and then closes below here, we will enter a sell targeting the next low. Simple. We enter a sell targeting the next low because sellers have pushed the market to break a key level, to break a support level. Same thing, if buyers push it up and then it breaks resistance becomes support and we buy from there, supported, targeting the next high. Simple. But remember, the candle must close either above or below. When I say must close, I mean the body of the candle should either be left below here or above here before it's an entry confirmation. Next, we want to go down to 4 hours. 4 hours and daily, they say almost the same thing. We are still looking to mark our key levels because we cannot trade if we don't mark out our key levels. These key levels, they tell us when to enter and exit the market. Imagine selling from this resistance and then taking profit at the next support, because you know that when price sells and gets to support, it might react, and at support it will not easily break it, so it will buy. So when you draw your key levels, you know where to enter and exit the market. Simple. So on the 4 hours, we are still looking to mark out our key levels. We can see a very good key level at this point. So you take your horizontal line and you mark it. Excellent. Now studying candlesticks here, you want to first of all say, okay, am I seeing more sell or buy candles? Okay, currently now I see more buy candles. It was selling, but then now I am seeing more buy candles. So is this telling me that USD card buyers are trying to pressure it up? I don't know yet. I will only know when I have a candlestick confirmation. When I see a candle, a hammer, right? A candle with the wick below and the body above, closing above here, or a bullish Marabuzo candle, like a full momentum candle closing above here. That's when I will know that, okay, buyers have pushed it, broke a major level and then crossed up. So I will follow the trend and buy up. I will know that sellers want to push it down when it breaks support and then closes below here. Simple. Understanding candlestick. In as much as we have all these major levels, major resistance, major support, major and stuff like that, we also have minor levels. So we'll talk more about the minor levels on the 1 hour. So we have major levels and we have minor levels. So I use this horizontal ray to mark out my minor levels, minor support and minor resistance level. Now these minor levels, they are levels that you are expecting price to react on for you to have your entries. Because imagine we want to sell USD card when it breaks this major support level. We can be waiting here for hours, right? And it will not easily drop down here. But within this range, we have minor levels inside here. We have a minor resistance level up here. You see levels that price has been respecting inside here. You mark it. We also have a minor support level. We have a minor support level below here. You mark it. So this is a range. This is a range. So you take this rectangle and you put it here. This is a range. So it is telling us that, okay, if USD card buys and then closes above here, it means buyers have won and buyers want to push the market upwards. Also, if this sell candle drops and more sell candles form and closes below here, it means sellers have won. So we'll have we might have, like I was saying, if sellers finally win and leaves this range, if sellers break this minor support becomes resistance and we sell from it. So a possible sell trade might look like this. TP targeting this low, stop loss slightly above the minor resistance level. And now if buyers win and they break this range and then closes above here with either a rejection candle or a full momentum candle, we might have a buy entry at the resistance level, because the resistance level has been broken, so it is now support level, and we buy from that new support. Stop loss slightly above minor support, then TP targeting the next high. So depending on who finally wins, depending on which candlestick finally wins and break either of the range, either the resistance or the support, we might have a possible buy entry like this or a possible sell entry like this. Remember, candlestick confirmation. And now look at this. You see that USD card has bought. This is a full momentum candle, and the candle closed above resistance. It is good. It is saying this resistance is no longer a resistance level. Maybe buyers are trying to push it up. Now, when a resistance level breaks, you will not just easily go and start buying. You must wait for a retest. So retest is like validating that level. It's like ensuring if buyers really want to take over their market. So this sell that you see happening right now, it is called a retest. Now, if after this other candle closes above here on the 1 hour time frame, that is the 1 hour candle close, like 1 2 3 59 seconds, 1 hour, and this candle close as blue above here, this resistance level has been violated, and it is now a support level that we buy from. So that's the only case where you should place a buy or a sell, because you have a candlestick confirmation. The video is getting too long, so if you have any questions, drop it in the comments, and I'll do another video responding to you. Remember, I am X-Buddy, the self-life trader, and I always make forex make sense. So if you want me to do a video on chart patterns, how to identify chart patterns, and how to trade them profitably, drop a comment. Be sure to subscribe to my YouTube channel. Click the link in description to join my free Telegram channel. Click the link to also create your forex trading account with the recommended broker. I'll see you guys in the next video. Bye.